Welcome to the pod focusing on the aftermath and recovery from the devastating Palisades fires of January 2025. Journalist Joel Pollack, entrepreneur Oren Ezra, and construction expert Ron Goldschmidt serve up to the moment vital news and information, discuss the ongoing recovery efforts, and introduce us to the individuals and trades who are playing key roles in rebuilding our cherished communities. We're diving into the deep end and learning quickly how we can move forward together. We know the pain because we're living it. Real-time news, stories, resources, and insights on the ongoing recovery effort. Buckle up. We're three homeless guys.
Welcome to Three Homeless Guys, the podcast about the Palisades fire and the rebuilding effort. I am journalist Joel Pollack, here with entrepreneur Oren Ezra and construction guru Ron Goldschmidt. And we have a very special guest on this episode. He is the owner and expert at Amalfi Estates, Anthony Margulies. He's going to talk to us about real estate in the aftermath of the fire, what's going on, what's coming on the market, how much is it selling for, what property owners can expect in the Pacific Palisades. So, Anthony, why don't you say hi, and we'll do a more formal introduction later after we go around with a little bit of news.
All right. Well, thank you for having me on the show. I'm very excited, and whatever information I can help, I'm glad to be here. Thank you.
All right, so I have a little bit of news, and then some personal news. The news is an interview that I did on Sunday, March 16th, with Representative Darrell Issa, who represents Eastern San Diego in Congress. And I asked him about the insurance crisis that many people are facing in the Palisades, where they were dropped by their insurance carrier in the months or days before the fire. And many people are on the California Fair Plan, which some people call the California Unfair Plan, and it doesn't cover very much. And what can be done to make these residents whole after years, decades of paying their premiums on time and doing everything right, suddenly finding themselves without the insurance they paid for. And he suggested two things. First of all, that going forward, there might be a way to make it possible to buy insurance across state lines so that California residents can buy insurance from people willing to sell it in other parts of the country to them for their homes in California, which currently you can't really do. The other thing he suggested was that there ought to be a class action lawsuit of some kind by the California Fair Plan policyholders against California Fair Plan or the state. And I think what he had in mind was some of the previous lawsuits. We've talked about them a little bit on past episodes of the podcast, but previous lawsuits where they were able to target a power company, let's say, or a utility that could be blamed for starting the fire, and there were deep pockets there, and residents could get paid out. Here, I don't know how simple that will be. We don't even know what the official cause of the fire is yet, so it's kind of hard to say. Over in Altadena and Pasadena with the Eaton fire, they've identified SoCal Edison as the target, as the defendant, so it's a little easier over there, even if they have difficulties in other ways. But that is still not going to cut it, I think. And there's going to be a question about how much funding can come from the federal government to make the policyholders whole here. He did tell me there's going to be a supplemental spending bill coming up for California fire relief. So we're finding out more and more about the legislative process. And as that goes forward, we're going to try to find out what can be done and whether there are provisions that can be written, whether there are special loans that can be made. We've talked about that as well from the Federal Housing Authority. So lots of things seem to be still possible, although he suggested that the appetite for a quote-unquote bailout by the federal government is not going to be that strong because Pacific Palisades is seen as an affluent community, and taxpayers might say, why are we bailing these people out? So that's a political problem we may have to deal with, and at some stage we may have to get our senators involved. We'll see. The other piece of news is personal news. I am still struggling with my insurance company a little bit. I have a new adjuster. So the adjuster we had for the first 2 months has now been taken off the case, taken off the claim, and now I have someone new. and he is much more competent, but he is not necessarily on my side in any way. So it's sort of like having a worthy opponent in the ring. So you can kind of trade punches, and you both know the rules, and you are trying to beat each other a little bit. So there's a kind of mutual respect, but it still isn't really productive yet. And it's frustrating. It's very frustrating. And this week I'm starting with a contractor that I've hired. I've taken the financial risk of hiring a contractor to go through the contents of my house. So my house is one of the few that is still standing in the Marquez Knowles neighborhood. And we're going through and we're going to throw things away and itemize everything. And my hope is simply that State Farm is going to agree that these things cannot be salvaged, or the cost of cleaning them is greater than their value, and they're covered under my policy. I don't know that State Farm is going to agree to that. I just can't wait for them any longer. They have irritated me so much. It's now more than 2 months into this thing, and we can't move forward. We can't move our lives forward. And I have some property questions that I know Anthony will be able to answer, or at least I hope you'll be able to answer them. So let me leave it there and go to Oren with his news.
So let's start with some debris news.
The debris report.
The weekly debris report, the bi-weekly debris report. So there is no news over here. What I'm hearing, I think that I heard some people that removed their debris were able to get final inspection in a week, which if this is the case, that's amazing. I think it will be great. Me and Ron are starting this week to remove our debris. We finally decided that we're going on the private route. Obviously, we're going to use Tom of the Line and Gital that was here on the podcast. So that's exciting. We're finally moving. We've been looking a lot on different construction companies and different construction startups and different construction ways to build, and have been learning the difference between prefab to a factory home, and the difference between if it's going on your Title 24 when after they tie the house into the ground, or before that. So there is some exciting news over there that we'll probably start bringing to the podcast in the next couple of weeks. But I think the moving forward and starting to hopefully looking into building is putting myself at least on a positive note. I know that what's very hard to a lot of our friends is how do you build with insurance money. And I think a lot of the things will go back to two things. Insurance is one, and the second thing is the city and the county. It will be insurance and permitting. And between the insurance and permitting, I think, and again, we raised it last week, if we'll be able to somehow do something to shorten these processes, that will be great. Then I'll become optimistic again, because Anthony, I don't know if you listened to some of the previous episodes that we were talking about it, and I said I think that honestly 50% of the people are not going back in the next 5 years. That's how I see it. I did in the until 2 weeks ago maybe started to see some movement and some I had some hope. And hope that maybe permitting process will be easier, but from what I see on the debris, I'm not optimistic. I don't know if if any of this big county or city organization knows how to do it quicker. So I'm hoping yes, but let's see. Time will say.
My take on the debris news is that let's take the positive headline away, which is we're going to start debris removal privately this week. On the insurance front, Joel, I echo some of your sentiment. What I'm seeing on a lot of the chat rooms and a lot of people that are dealing with insurance is the initial generosity has kind of like worn off now from the insurance companies, and it's now settled into this like war of attrition between the claimants and the insurance companies. And it's kind of settled into this like long-term war of attrition where, I'm going to do something and I'm going to, work the system. And from the insurance companies, what people are just basically saying is like they're hoping that like the claimant will give up on some of those things and they'll won't have to pay 100% of the claims and they'll end up settling for something lower, or some people will just give up. And that's kind of like the math on the insurance side of things. But I'm hearing a lot of the same things. Like people are actually becoming a little bit more frustrated now with insurance after this initial halo where everybody was like, getting allowances for living expenses and for some of the initial percentage of possessions. Now it's like a fight. It's a grind.
Wait, there was a halo period? There was like some good
There was
period?
a halo.
Did I miss
If
it?
you lost your house, if you lost your house, there was a little halo period at the beginning where they're just, wrote checks. I don't think it was the same for people with standing houses. That was just a fight from day one. So that's why I'm saying that. But one thing that I don't know if we have the clip, but I listened to one of my favorite podcasts, All In, over the weekend. And they were talking about some of the same sentiment that we've echoed on previous episodes, which is, what is the outside world thinking about the Palisades fire 2 months later? We're in it day to day. We're feeling all these feelings. We're fighting the good fight. What do outside of our environment, our neighborhoods, what are people thinking? And this is a national podcast. I don't know, Oren, if you can bring up the clip, and I'd love you to comment about it.
Important to understand. Even what happened in the Palisades, like in LA with like the fire, the second people heard it was like rich people's houses, there was no empathy for it.
$4 million house. It was like,
and it is.
I don't even have a house. I can't find a house. You burned your house down and you went to your vacation house. Now, I'm sorry, you're living at your ski house. That's a tragedy. Like literally, you're right. Yeah.
It probably explains why we don't hear anything in the news anymore about anything that's happening with respect to reconstruction or
Nothing.
any of the disruption that's happened.
It's important.
Well, we should send them a link to Three Homeless Guys, because certainly we're producing plenty of news about reconstruction and rebuilding. But they're making a good point, which is that we aren't the most sympathetic to a national audience. But, there are a lot of people who went from having a house to being instantly poor because they didn't have the insurance they paid for. And that's part of the problem. And we joke about some of the hardships that some people are able to endure with financial means, but there are a lot of people, especially in the Marquez Knolls, where I live, who are retirees who bought their homes 30 or 40 years ago and can't afford to rebuild. And this was all the savings they had, everything they had to put in their homes. That's it. Nothing. So very tough to hear that, but maybe there's some truth to it.
You know what I take out of this clip, Joel, is, I take something else out of this clip. And it is that nobody's going to help us unless we help ourselves. Like, you're not going to get any sympathy from any level of government, nor should we expect any, nor should we expect any help. And the only thing that we can do is just rally ourselves and help ourselves by any means necessary, because you're not going to get, that sympathy from anyone else. That's what I get out of this clip.
Well, perhaps someone can help us, and he is our guest this evening. And I'm very pleased to have Anthony Margulies. He is, of course, the founder of Amalfi Estates. I have some information here, Anthony, which I'm sure is inaccurate. It says you founded Amalfi Estates 32 years ago, but that would have been when you were 5 years old or something. I mean, that doesn't really seem to make sense. How old were
I get the Stanley Tucci look-alike a lot too. I do. I just can't cook. So I had to do real estate because I'm a horrible cook.
So you and your company have sold $2.5 billion in homes with 1,500 families, 600 of whom were in the Palisades, 350 of whom lost their homes. That's staggering. And everybody knows you're one of the top Palisades agents, and your home was in the Alphabet Streets. You lost your home, correct?
Correct.
Okay. Yeah. The Amalfi Estates logo, I mentioned this before the show, was on the jerseys of my son's Pacific Palisades Baseball Association Little League team last year. So I feel some connection to your company. And it was always exciting to see the Amalfi signs as we drove around town. And it's a medium-sized real estate team, but it's one of the top in the country. You've also been very civically active, and you started onepally.com to help community building in the Palisades. And that's an extension of the philanthropic work you've done over the years, where your real estate firm has donated $2.5 million through charitable giving. You have this practice of tithing, where 10% of each commission goes to the charity that your client chooses. That's very interesting. I saw that on some of your signs over the years, and I thought, does that just mean they jack up the commission? I mean, how does that work? But it is kind of a neat idea. So you could explain that if you like, but first of all, welcome to Three Homeless Guys.
Thank you. I'm excited to be on here. You've had some great guests on here. The content's amazing, and it's very much needed. So thank you guys for providing this service.
Well, let me ask you, first of all, you're also a homeless guy. So this is one of those homeless foursomes that we've had from time to time. What has your experience been like, if you want to talk about January 7th?
So it was brutal, like everyone experienced it. 23,000 people become homeless overnight. We moved 7 times in the first 30 days for various reasons, because either the place we went to had to get evacuated, or the place we went to didn't take dogs. So it was very challenging. Luckily, we didn't have a lot of stuff to move with us, so that made it a little bit easier. But we're excited about the rebuild. We're excited about being able to help the rest of the Palisades. And my real mission is, I hear so much misinformation on the news from either real estate agents out of the area, or just people saying things on WhatsApp or Nextdoor that may not be accurate. And so the goal is to give accurate information, whether that be for home values, whether that be for insurance information, and really spread accurate information, because we feel more in control when we actually have real knowledge. And that's what you guys are all doing. So great service.
Okay, so if you had to pick the biggest misconception about real estate in the Palisades today, what would it be?
That there's a mass exodus going on in the Palisades. I think that's been the biggest challenge. There's a fantastic organization called AfterTheFireUSA.org. I don't know if you've had Jennifer Gray.
Yeah, we had her on last week, I think.
You just had her on.
Yeah.
Right. So she is absolutely amazing, and she had a statistic that out of the 14 major fires in the United States, 80% of the homeowners moved back. 80% of the homeowners. And typically in the Palisades, for example, you mentioned it, Joel, there's a lot of retirees and elderly, and 25% currently of the Palisades are 65 years or older. So with this whole misconception that the Palisades is a bunch of wealthy, rich people, a lot of middle class, a lot of nurses, a lot of teachers, a lot of retirees who bought their homes for $30,000 or $40,000 40 years ago. And it just happens they're very rich in land, but they're not rich other than that, because they just happen to have an asset that appreciated more than other people's assets.
Yeah, when we bought in the Palisades, we were living in Santa Monica, and I have to be honest and say I really wanted to stay in Santa Monica. But per square foot, Santa Monica was so much more expensive than the Palisades. And people think of the Palisades as a wealthy area, but the fact is there is more middle-class housing stock in the Palisades. And so at least at that time in 2019, Palisades was cheaper per square foot than Santa Monica. So it made a lot more sense to buy in the Palisades.
To say less expensive.
Less expensive, not cheaper. Right.
When you're paying the numbers that people have to pay, it's less expensive. So.
Right. It was more affordable. It was still barely affordable, but when my wife saw the house, I knew that this was going to have to be what we made work, and we were going to hang on by our fingernails, and we were going to do it. But now, of course, we're facing a different market, and you say people aren't leaving in droves, but we do see lots coming up for sale, even a few standing homes coming up for sale. You have these fantastic emails, and perhaps you could tell people how to get onto the email list so they can get these great updates from you. But you send out the latest statistics on property values and on transactions. So what is happening right now? And feel free to plug the email list, by the way. You can do it at the end of the
So if anyone wants
podcast
to
as
be
well.
added, they can just email me directly. They can, Google my name and just email me, and I'm happy to add them to the list. Currently, as of an hour ago, there's 83 lots that have come on the market in the Palisades. These are burned homes in the last 30 days. Out of those 83 lots, there are 11 in escrow, 6 that have sold, and there are, let me see how many actually that are active. There are, I believe it's 63. I'm just doing my math real quick here. I believe there are 63 that are currently active. So what's interesting is the ones that have sold, the very first one was in the Highlands. I know you've talked about that in the past. That was the very first property to sell. There's been one in the Huntington. There's been one in Marquez Knolls. And then there's been 3 on McKendree. And what's fascinating, the 3 that sold on McKendree, there's 3 additional active listings on McKendree as well. So it's fascinating that literally 10% of all the active lots in the entire Palisades have been on one street. And they happen to be ocean views. So we don't have a lot of data, so it's hard to really extrapolate. We expect approximately 500 to 750 lots to come on the market in the next 6 to 9 months.
If you were to reverse engineer like the value of the lots, or like what prices are transacting to before the fires and what the lots were worth, like what are you seeing in terms of delta from the change?
Ron, it's a great question. So it depends on the area. The Palisades is unique because there's 12, some would say even 13 geographical submarkets. Most other markets like Santa Monica or Brentwood or Malibu have 6 or 7 geographical submarkets. Palisades has double that number. So what happens in the Highlands is going to be completely different than what happens in the Riviera. What happens in the Huntington is completely different than what happens in Will Rogers. But as a general tone, right now we're about 10% in at the data pool. So if we're looking at 83 lots that have come on, and we're 2 months into the cycle. So tomorrow will be officially 70 days since the fire happened. So we're 10 weeks into this cycle. We're basically looking into this basically at 10 weeks. And when we look at 100 weeks, we know we're about 10% into it. So what we see so far, based on the limited data of closings, is as follows. The first property in the Highlands appears to have sold about 30% under what the market value was of that land. Okay, that was on Avenida de Herradura. We believe that lot was worth about $1.7 million prior to the fires. It came on at $999, sold for $1,185,000. That's a 30% drop in values so far. We expected, one of the big misconceptions was that the land and that property values in the Palisades would drop 30 to 50%, because that's what happened in the Woolsey fire, that's what happened in the Tubbs fire, that's what happened in a lot of the other major fires that we've seen in the country. But Palisades values have retained their value much more than anyone expected. I'll give you an example. In the Riviera right now, properties have actually appreciated 10 to 15%. So we've had the biggest fire in U.S. history based on property damage, and yet the Riviera, which was less affected, we all agree, and it borders Brentwood, actually appreciated 10 to 15%. Then you have the Huntington, which is probably the most desirable area that people want. About 50% of the buyers right now want to be in the Huntington. 50% of the buyers. That neighborhood so far, based on the one that sold and based on the 2 that are in escrow, has depreciated only about 10% since before the fires, which is a staggering statistic. So to answer your question, land per square foot in the Alphabet Streets, Villa Bluffs, and Omedio Bluffs traded before the fires between $468 and $480 per land foot. So a 5,200 square foot lot in the Alphabet Streets would trade for about 2.5 to 2.6 million. A 6,500 square foot lot, which is about 50 feet by 130 feet, would trade for 3.1 million. So the 5,200 square foot lots, which are 40 foot wide, 2.5 to 2.6. The 50 foot wide lots in the Alphabet Streets would trade for about 3.1 million. Now we're seeing those $3.1 million lots, or land value, trading closer to 2.4 or 2.5. Now, if we really get into the details, the 700-800 block of the Alphabet Streets is going to trade for less because you're closer to Sunset. And the 1,000 or 1,100 block is going to trade for more because you're higher up and there's less traffic that you're dealing with. The corner lots are going to trade for a little bit more as well. And if there's an ocean view component, that'll trade for a little more as well. And to really drill down, if you have two identical lots, so let's say you have 1,000 Embry, that's let's say it's a 5,200 square foot lot, and you have 1010 Embry, and they're both 5,200 square foot lots, and they both have burned down homes, and they're both identical in every way possible. The difference being, one had a 1,000 square foot home on it prior to the fires, and I'm just making this up. I don't know if 1,000 did or not. I'm just using it as an example. And if 1010 Embry had a previous 5,000 square foot home on it, 1010 Embry should sell for $200,000 more because of the carrying cost. If you wanted to take that 1,000 square foot home that was previously on 1,000 Embry and put a much larger home on it, it would take about a year, maybe even a year and a half to get the approvals because you're going to have 2,000 homes ahead of you that are building within 110% of their previous square footage.
All right, so let's even get into the more minutia there. Like, who are the end buyer? Who are the buyers? Is it developers? Is it end users? Who's buying right now?
It's a great question. So initially it was developers. So what we saw was in the first 2 weeks of the fire is developers descending on the Palisades, offering 20 to 25 cents on the dollar. They were offering $750,000 to $850,000 for lots that had sold for $3.1 million. 25 cents on the dollar is what they're offering.
That's incredible. That's just highway
was
robbery.
Luckily,
no one took it, right? No one took it, right?
Yeah, not that I'm aware of it. I mean, well, I know no one took it because of the 6 closings that we have so far. But so far, to answer your question, initially there were a lot of developers. But the developer model does not work in this environment because you can't buy a product for 10 to 20% under current market, have a 50% increase in labor cost, because prior to the fires you could build for $650 a foot for flat land. I'm not talking hillside. For flat land, it was approximately $650, give or take, per foot to build. Now it's closer to $1,000. I know you've heard that a lot on a lot of different panels. That's 50% increase. Okay, and we're not even talking, when you talk about lumber from Canada, Canada exports more lumber than any other country to the United States. They actually export more than countries 2 through 11 combined. So when the costs go up 50%, but you're only buying at a discount by 10 to 20%, the numbers do not pencil for a developer.
So Anthony, if they don't pencil for a developer, do they pencil for homeowners? I mean, homeowners are facing the same cost. Okay, you don't have to buy the lot, you own the lot. But construction costs, very high. I mean, we have heard the 1,000 square foot, 1,000 per square foot.
Are you guys familiar with the Builders Alliance? Have you guys talked about that?
We have mentioned it or similar concepts. Is this the idea that Steve Silberoff has to basically bring in?
It's not Steve. There was a white paper done by UCLA and USC.
Oh, right.
And they got 9 of the biggest builders in the country together. One is Thomas James Homes, one is Lennar, and they've guaranteed they can build for $600 to $650 a foot on their base model. And you go in and you can choose which floor plan you want, which style of home you want. And they also are guaranteeing that within a year of getting building permits, they'll have the house completed. So because of the economies of scale, so for example, Thomas James Homes, they said that they can scale up to 1,000 homes that they can do. So if someone's underinsured or doesn't have the funds to pay the $1,000 a foot, that's one potential alternative for them.
It's very interesting. I mean, it'd be great to get more information about that. We have spoken to people who had ideas for similar concepts on their own, pooling resources, maybe neighbors or groups of homes buying materials together. We've seen some of that. We talked to a guest in a previous edition who had similar ideas. What about standing homes? And this applies to me. I'm I suppose, in the small minority of people who didn't lose a house, but we did have some fire damage. The insurance company seems to think that you can wash it off with soap and water, but it really isn't like that. It's serious fire damage, and the more serious I get about looking at it, the more serious it becomes. We had our fence burned down, so that created not just smoke damage inside the house, but it also charred an entire wall of the house. So that's pretty serious. But leaving that aside, what are you seeing with standing homes in terms of a real estate market?
Standing homes have it the worst, I think, than even the homes that got destroyed, because mainly the insurance issue. I've talked to numerous people who've been in this situation, and normally when you have some type of environmental issue, whether it's asbestos, lead, radon gas, there's tests that you use to quantify if something is safe to move in or not. With smoke damaged homes, from what I've heard from numerous insurance companies, and maybe you can confirm this, Joel, is they have a sniff test. And what they say is, if a normal, it's not what you smell, but what a relatively normal person would walk into your home, if they don't smell smoke, then it's deemed safe. It's the most ludicrous thing I've ever heard. As opposed to like radon, which you have a test for, and asbestos, you have a test for, and lead-based paint, you have a test for. But when there's major fire and smoke, it's the sniff test.
So it seems obvious to me what needs doing. I mean, one of the reasons I'm so motivated now is because we did get some testing done, and the results came back that we had dangerous levels of lead in 3 rooms, the 3 rooms of the house closest to the fire. Not exactly a surprise. It was interesting to find out. I have a friend who's an architect who came and toured the house with me last Friday, and he pointed out that the likeliest point of entry for the smoke was actually the light panels, where you switch the lights on and off. I'm using the wrong word, but basically those switch panels, which are fastened to the wall, but they're fastened to an opening in the wall, and you have smoke blowing through exterior ventilation, somehow passing through the wall, especially if the insulation was burning or something was burning inside the wall, and then you have the smoke coming through. We think the lead came from older buildings, perhaps the school which burned down next door, but whatever the source or cause, we have lead damage there. The likeliest thing to do, or the smartest thing to do, would be to rip out all the drywall and start over, essentially. On the side of the house that burned, we need to replace the stucco and maybe take it down to the studs completely, because we have to remove the drywall as well. And the insurance company is talking about soap and water, essentially. And you're right, they have these weird things that they want to do. There's no way you'll ever convince my wife, for example, to sleep in that bed ever again that's in the master bedroom, which has dangerous levels of lead. But the insurance adjuster says, well, we can launder that, or we have a cleaning process for that, or we can do something with that. And it's absurd. It's just absurd. So we should do a whole show on that. But in terms of home values, let's say you can resolve all those issues, and let's say you can even eliminate the smoke smell from your house. What's the resale value of those homes compared to before the fire?
It's a very good question. I'm asked this a lot. We have no data. We have 0 data. And so it's hard enough right now when I'm basing data on 6 solds. And remember, in 12 and 13 different geographical markets, we have 0 sold properties for non-completely burned down homes. So it's subjective now. It's what a person is willing to pay and what their comfort level is in buying a home that may or may not have had smoke damage. We know it's a discount. We don't know how much of a discount it is until we start getting some closed data.
Very interesting.
Now I don't have any.
So you would rather have had your home burned down from a real estate perspective
100%.
than...
I think the issue here...
The only benefit that you have that I don't have is that you got to keep your family heirlooms and I didn't.
Yeah, my wife says we have too much stuff anyway. When I put the fire out on the fence afterwards, she said to me, given all these insurance issues, you should have let it burn.
For homes like yours, because insurance is so difficult and so challenging. It really makes it not easy. So
I think the reason why there are transactions going on for lots is because, on total losses, the insurance at least is paying out, right? So
right.
the home sellers can be at least made whole on their previous value, so they don't mind selling, right?
Or
But
almost whole. Not quite
right.
whole.
But not everyone.
not everyone, but at least
Right.
close to whole,
Yeah.
right? If they didn't have huge mortgages, they're willing to make a deal at some price. Whereas folks with standing homes can't be made whole by insurance, can't even made partially whole by insurance. They just have to wait it out or find a willing buyer that's willing to buy because they can't really rebuild for $1,000 a foot, right? Like
It's not even the value of the house right now. It's the value of the neighborhood. You know, like, do you really?
Well,
wanna
it's
live-
also the value of the house, because if you're going to buy from scratch and build from scratch, you're going to be paying exorbitant prices. You have a standing home, maybe you can fix it up. You have a footprint, you clean it up. Like there's also a positive to that. It's just that I think the first batch of sales we saw are from motivated sellers that just want to be like, done with the situation and probably move on.
And it's going to be interesting. So I'm telling a lot of sellers that'll listen now, is that if you are interested in selling, you might want to do it sooner rather than later. You don't want to be in the market when in 30 to 45 days, there'll be close to 200 lots on. And then in 4 months to 5 months, they'll be close to 300 or 400, because we're averaging 3 a day. Some days it's 2, some days it's 5 or 6. So it's all supply and demand driven. And the question is, how much of the market can absorb all this rush of inventory? The same argument's going to be made in 2 and 3 years from now when there's 300 new constructions on the market. And how many $6 to $20 million, $15 million buyers are there going to be at that time? It's going to be very interesting to see what happens. So the other interesting thing is ULA. So the mayor came out today, and she's been saying it for about 4 or 5 days, but actually officially said her goal is to temporarily, for the Palisades and any other affected communities, to postpone the ULA, the mansion tax as we all know it, which is 4% for homes up to $5 million, over $5 million, and homes over $10 million is 5.5%, to waive that, to actually get more transactions done. Because can you imagine if you had a very expensive house, let's say it was 8 or 9 million, it burned down, and your dirt is now worth $5.2 million, and you have the added insult to pay another $200,000 in mansion tax on your lot that burned down?
And permitting
So-
fees. And permitting fees right now, in addition to everything, because
Well,
they haven't
permitting
waived
fees
those
is a whole
either.
other conversation, but
Yeah.
permitting fees permitting fees. I've talked to a lot of people. It's getting a little blown out of proportion. Everyone I've talked to says it's going to be between 15 and 30,000. The ULA tax can be 200 to 400,000. We're talking 10 times what the permitting fees are going to be.
And it's not just homes, right? I mean,
it's apartments
other buildings
also.
as well. Like if you have commercial buildings,
The
everything.
mansion tax was a fantastic PR move by the people supporting it, because 50% were commercial properties, and it wasn't a mansion. Look, the properties that are affected, when you have a 1,200 square foot home on a 9,000 square foot lot, that's not a mansion. So it's really affecting people that it shouldn't be. And I think she wants to remove it, but the problem is she doesn't have the power to do so. It was voted in by the constituents. So most likely it's going to have to go back to the ballot. But I think from a PR standpoint, it definitely helps her saying publicly that she wants to get rid of it.
I read somewhere that they can also amend the city charter somehow. I don't even know how they do that, but that's another way of getting rid of Measure ULA, is to just change the city charter, and then they don't have to wait for the next election.
Yeah, the only downside in removing ULA right now is that it'll probably get a lot more developers back in, and a lot of people really want locals and owner users. They don't want a whole town built with developer properties. They really want more local. So if they remove ULA, that's the one downside byproduct of that.
I think we just need, like, whoever can build, go ahead and build. This neighborhood has like so many houses that burned down. This neighborhood need to get rebuilt, like for me, let's say my situation. I have a 14-year-old kid. We're moving into a different high school now. I'm not going back in the next 4 years. And then I have a younger daughter. She's 2.5. She's going to start have friends. We're not going back. I don't think we're going back right now, as I see it right now. And
You're not going back at all?
Yeah. Yeah, I don't think I'll go back, because my son is already going to finish his high school.
Yeah, people with
somewhere
young
else.
kids, I totally get it, Oren, because you're like do I want to wait put my life on hold for 3 to 5 years and then go back? So people with young kids, I get it. It makes sense. I mean, I understand where you're coming from.
And think about it, like me, there is a lot of people, like, unless the city, the county, insurance company are like deciding to do a 180 U-turn and say, hey, you know what, from now on, everything, we're going to make it very clear, like, we're putting April 2nd, just so it's not falling on April 1st, but April 2nd, you'll know exactly how long it will take you to get your permits, how long it will take us to get you like electricity, how long it will, like everything, and the insurance companies as well. This is the due date that we have to give a decision. We need to give a decision. Not like, okay, we'll give you another check. We'll give you a decision until this date. Somebody need to come and put a date on the calendar. Until this date, you'll have all the answers you need to know. And then if I have all my answers until April 2nd, and I can decide, okay, I can build my home in I can get permits in 3 months. I can build my home in 6 months to a year. Okay, it's a 1.5 year process. Okay, then I can think of how do I come back. But right now, it's such a big unknown that a lot of people, even if they want to go back, they just don't know, the amount of traffic we're going to have. PCH is being closed every twice a week. Cost of building. You're talking about wow, it would be amazing if we'll be able to build in $600 square foot. Me and a lot of people like me that had I had a really good situation with insurance. I had State Farm. They didn't cancel me, and few more friends, they didn't cancel them. So even us, we don't have more than $450 a square foot to rebuild. So it means that we need to put a lot of money out of pocket to rebuild right now. So I'm trying to understand where is the optimistic people in these pictures. What do they see? How, for instance, you just mentioned that 80% of people after fires got back to their houses. I think that if you take it and you put it on California, I think the percentage goes way, way down. And how do you see 80% of the people?
Oren, Jennifer was referencing 7 of the 10 biggest fires have been in California. So they're referencing the Napa fires and the Woolsey fire and the Tubbs fire. So those were California fires. I mean, Hawaii was really the only other big. Oregon had a couple too. But look, we can be positive, we can be negative, we can be realistic, we can be, no one knows right now, but I do know that the first approvals are going to happen in the next 2 weeks. There's a property in the Alphabet Streets, one of my friends. He's very, very close to getting approvals. They could probably start construction. Several lots I know of will start construction in the next 6 to 10 weeks. Once people start seeing construction, they're going to feel a lot more optimistic with this process. The reality is they can build some of these properties in 6 to 9 months because there's not a noise ordinance in some of these neighborhoods. You're not waking anyone up. You can build 24/7, and they can start getting positive and start feeling like there's some good things happening.
They cannot build 24/7, just like they cannot do debris. You know that they cannot do debris removal over the weekend? Nobody's living there. Why can't they do debris removal over the weekend? I don't know.
I'm not referencing debris removal. All I know is I've talked to several builders, and they said they believe that they can have these homes done in 9 months because they don't have to stop at 5 o'clock, or they can't, they can start early in the morning, and they can do different hours than what they normally do.
Is it let me ask you a question. Is it the owners of those houses that are rebuilding with insurance money? Because I think this is where the gap is in understanding is whether, most people that can rebuild will rebuild. But where we see the gap is there's a gap between coverage and insurance coverage in a lot of the Palisades in Malibu and what people are going to have to pay for rebuilding. And unless you have that covered personally, you're going to have to take a pause, see what insurance pays you, find an economical way to build, and then go from there. Because I don't think most people are in that situation.
Yeah, I mean, what you're referring to is one way to look at it, is anyone who had the FAIR plan, and I was trying to get accurate numbers. I believe it's 25, maybe 30%, but don't quote me on that, had the FAIR plan in the Palisades. If you have a home that's 3,000 square feet or bigger, most likely you're going to be underinsured. If it's $1,000 a foot and you only have $3 million available, then if your home was bigger than 3,000 square feet, you're probably going to have a shortfall if you had the FAIR plan, for sure.
You know, I've been participating in many of the different insurance groups, and the most difficult conversations are always in the FAIR plan group. State Farm, there's a lot of frustration, but the FAIR plan group is really just so much despair. It's very hard because many people had State Farm, they had other policies perhaps, but they are really in a tough situation. Before we leave this topic and get onto the topic of rental, which I want to ask you about in a second, I want to also just ask you about something Oren said in the beginning, which was he doesn't see 50% moving back in 5 years. What do you think it looks like 5 years out?
So based on the Woolsey fire, we were using a lot of data for that. They've only built, it's been 6.5 years. The Woolsey fire was in 2018. They only had approximately 30, maybe 35% of the homes rebuilt. People were using that as the model, like see, Palisades is going to take forever. Palisades has had so far the fastest milestones of any fire in U.S. history. It was supposed to be 90 days for phase 1 EPA. They did it in 28 days. Supposed to be 18 months for phase 2. They expect it to be completed in the next 10 months or so. So the reason the Woolsey fire, after 6.5 years, has only done 30 to 35% is because 4 years of that was during COVID. They basically closed the Malibu building department. Okay, they didn't have surveys where the properties were. We're not talking about 40 and 50 foot wide lots in the alphabet streets. We're talking like half acre lots in Malibu. They had to deal with septic systems. 95% of Malibu is on septic. We don't have those issues. They also had, they don't have underground gas. They had a whole variety of issues that we are not dealing with. So I believe that it will be 3 to 5 years for the community to feel like a community, which means the majority of the homes have been rebuilt, means the center of the Palisades and the business district have been rebuilt as well. But in the next 2 years, I think you'll see a decent number of homes have been rebuilt. But it'll take 3 to 5 years for it to feel like a community.
What do you think about that number? I mean, I think we've talked about that 50% number. I think the 50% number is close if you also configure the amount of people that are going to be switching lots within the Palisades, i.e. my life situation has changed. I want to buy another lot somewhere else. Maybe my old house doesn't fit anymore to my life in 3 or 5 years. And I think between that and the people that will leave, we're going to be close to the 50% number in terms of turnover on pre-existing lots. How do you feel about that number? Close, far? Do you agree, disagree?
There are a lot of people that want to buy houses for their kids. They want to buy additional houses or they want to upgrade. Let's say they're in the Alphabets and they want a view property, or maybe they want to be in the Huntington. So we are seeing that as definitely pushing the market. Whether it's 50% or not, it's a little too early to say.
All right, let me ask you about rental. So we don't have too much rental stock in the Palisades, but it does exist, or it did exist. What are rentals looking like compared to what they were before the fire?
So it's a really good question. Right now, there aren't a lot of rentals. Typically, in the Palisades, there are more rentals than people really imagined. Normally, you'd have double the number of sales on the market than you would rentals. In the last year, that kind of flipped. We actually had double the number of leases on the market than we had sales. On average, as a rough rule of thumb, it's about $5,000 for every $1 million of sales price. That's really kind of the Anthony rule. It's not like written down anywhere. So if you have a $3 million property, it typically should rent out for about $15,000 a month. If you have a $2 million property, it should lease out for about $10,000 a month. Now that's assuming standard number of bedrooms. So if you had a $3 million one-bedroom house, it's not going to rent out for $15,000. Okay? And the whole thing with the anti-gouging law that went into effect, it completely changed the rental market as we know it. Rents went up anywhere from 30, 40, 50, even 70%. There's currently 1,000 names on a list of people between landlords and real estate agents that are on a list about to be prosecuted. It's a $10,000 fine and 1 year in jail if you charge more than 10% of what the market value was for that property, if it had been on the market in the last 12 months. And there's a whole nother ruling of how they did it based on HUD. I know you had another agent on that had kind of addressed this as well. So
is that a criminal prosecution, or is it some kind of a civil
no, process? I mean, a year in jail is...
Wow.
Yeah.
Wow.
Yeah, no, it's serious stuff. It's not to be messed with. But we believe that the Palisades rental market will get a pickup from all the workers that want to live here rather than commuting from Riverside or San Bernardino County. I know there's definitely talk about putting temporary housing, maybe on Tahitian Terrace or maybe on some of the different lots that may be available for temporary housing for a lot of the labor. They're going to have 10,000 or more people working in the Palisades, and rather than it'll free up a lot of the traffic that's going to happen on PCH or Sunset, plus the gas, all the hours that people are in their cars commuting to do the labor that's necessary to rebuild the community. So I think a lot of the temporary housing, I know a lot of different groups are working on that right now.
Let me ask about another hot button issue, which is low income housing. So, according to the way the media have framed the behind the scenes political issues, you've got Rick Caruso and Steadfast LA pushing for a Palisades that looks something like the middle class to affluent or wealthy community it was before. Steve Soberoff keeps making public comments about how you have to accept low-income housing. It's part of California law now. You have to do it. You have to accept it. And there's almost kind of a moral disdain for people who might be uncomfortable with it. Then there was this sensational LA Times story about the family that owned or still owns the Shell station that exploded.
The eighth story.
Yeah, they want to build an 8-story low-income housing apartment block. And I mean, it's kind of funny because it's such a ridiculous idea. But my favorite part was the guy wearing a suit and telling everyone that they were not with the program if they objected to his low-income housing in Palisades. And, you know, you can just imagine this 8-story building, that itself, just the sight lines, like blocking the view, or it would be visible for miles around. I mean, that's the real reason people wouldn't want it. Never mind the low-income housing. There was low-income housing of a sort anyway in Palisades. But, I mean, what's going on with all that?
There's a big misconception about affordable housing in the Palisades. So people don't realize is we had a tremendous number of affordable housing in the Palisades. We had 3 mobile home parks. We had Tahitian Terrace, we had Malibu Bowl, we had Palisades Bowl. So we already had a large number of affordable housing. We had 501 Palisades Drive, okay, which was restricted income to the base of Palisades Drive and Sunset. Those are 1-bedroom condos that typically you could purchase between $150,000 and $250,000 that if they were on the open market would have sold for double that. And they were only allowed, you could only buy those if your income was like $57,000 to $68,000 or something close to that. Okay, and that was a very large development there. You also had all these 1-bedroom apartments.
That's still there, by the way. That survived the fire.
It's still there. You also have all the 1-bedroom apartments that a lot of rent-controlled apartments that are in the Palisades. So we already had a very, very robust and large amount. Right now, people don't realize 23% of the Palisades were renters. 23%. So we had a large number of renters that were in the Palisades. And we had a large amount of affordable housing, and we still do, based on 501 Palisades Drive. So.
What's going to happen to renters? Let's say they want to get back into the Palisades. Are they now going to have to pay more because the number of units has declined so much?
You know, it's a really good question. I have a lot of renters have approached me about wanting to buy properties now that they give the impression that they can now afford it because the property values have discounted. One of the misconceptions about buying land is people don't realize you can't really finance land. I know there's a couple of construction lenders that'll say, no, you can. But when you really pull back the layers of it, you pretty much have to own the land 100%. Okay, now, can you get an 8.5% rate? And if you give the bank $500,000 or $1 million of your money, will they lend to you at like maybe a 50% loan to value at 8.5%? Yeah. But they have $500,000 of your money. You got to put 50% down. You're pretty much, and you're paying way above market rates. Because right now rates are around 5.8 to 6.1 as of this morning. So if you're paying 8.5, 8.25, that's not a deal. And then you have to kind of, you can convert it to more permanent financing or a construction loan. And even if you wanted to get a construction loan, they lend typically 70% of what the finished product will be. That's basically like buying the land 100% in cash. So people don't realize land, it's almost impossible to really finance it. You have to own it 100%. So that's what makes it harder for renters, because they don't really have that cash a lot of times.
So many of us are.
How do you?
Oh, go ahead, Ron.
How do you envision? You're talking about the mobile homes, and the 3 areas that are occupied by mobile homes. Now that those, or the areas that are gone, like the Palisades Bowl, what's going to happen there, in your opinion?
So mobile homes, people may not realize, those are not a fixture. Those are personal. A mobile home is considered personal property, like your couch or your fridge or your TV set. So
well, I kind of live on the couch.
You're not owning the real estate, right? You have to pay a monthly rent for using the land that mobile home, we call them manufactured homes. They changed it 4 or 5 years ago from mobile home now to manufactured home. So the manufactured home, you are owning it as personal property. There's only a handful of lenders that will even lend on personal property. You cannot go to a conventional lender and go, hey, I want to go get a loan to go for this manufactured home. So it's personal property, doesn't appreciate as well as a fixture would, as an improvement on that land would. Okay, so it's a different asset class. But to answer your question, Ron, I don't know. I know there's been some stories that the owners of some of these mobile home parks have been wanting for years to clear those lots so they can put in more development and more higher end development. So I don't know what the highest and best use. I don't know if now that they've been able to clear the lots unintentionally, if they're going to put manufactured homes back on, or if they're going to develop them. I don't know what they're going to do.
Do you know what's the difference between a manufactured home to factory homes?
I think I don't know for sure. Oren, I believe a factory home is a type of manufactured home. But don't quote me on that.
I'm asking because I'm not sure. But from my
you mean like factory housing when a company builds housing for workers so they can go to work?
No. I mean like houses. Right? Houses that are built on the factory, but they're like already when they come in on your Title 24. They don't come in on Title 25 and then change to Title 24. So basically, it's just like high-end houses that are being just assembled on the property. But
right, they're pre-made and they can be assembled quickly. There are, and I know you have discussed this before on previous shows, there's some very, very high-end manufactured homes. So people's conception, the general public's conception of a manufactured home is that it's not that nice. But there's actually $3, $4, $5 million very, very nice manufactured homes. The question's going to be is what is the resale? If you have a home that's made of lumber and high-end finishes, and you have a manufactured home, because I've heard
made of lumber and high-end finishes,
for $450 to $500 a foot even. And then you have the non-manufactured homes that you're building for $850 to $1,000 a foot. I very hard to believe that a finished product, if you have 2 identical properties, that a manufactured home would trade at the same price as a non-manufactured home.
Even if both of them look exactly the same material.
Yeah, because one costs half the price to build.
Yeah.
How about those of us who still have standing homes where the construction will not be up to the same standard as the new homes that are built, where they're going to use fire-resistant materials and new construction, new finishes and all that? There's an advantage in a way to having a standing home. We've discussed a lot of the disadvantages, but you don't have to go through the permitting process and the bureaucracy, and you have to fix your house. If you can make it through the insurance maze, you come out the other side. But is there going to be a value difference between those homes, assuming the same square footage, and a newly built home?
You're saying an existing home compared to a newly built manufactured?
Yeah, or a newly built non-manufactured. I mean, what is the difference going to be once we have a resettlement of the Palisades?
I don't have data, but usually a new, if you have a home that's all fixed up, but it was built 20, 30 years ago versus a new construction or newer construction, the newer construction typically has a 20 to maybe even 25% premium on average. But it really depends on how old the other home was, and because brand new homes, the other issue is you can't put gas appliances in. So a year ago, they outlawed all gas appliances for brand new construction homes. That means gas fireplaces. That means gas stove. Now, I've heard that you may have a carve out that they're trying to do right now because people really want their gas appliances back, and they say, look, it wasn't our fault that the fire happened. So it's not definitive yet, but I have heard talk that there may be carve outs if people want to put a brand new home in and still have a gas fireplace or gas appliance. But you need to all double check that. I don't want to say that's a definitive.
All right, something else other than gas appliances that may be relevant is also insurance we come back to again. But let's assume you can build a home. Can you get insurance for a home, and how does that affect the real estate market?
I'm one of the few people that thinks insurance is less of an issue than what people are thinking. If you look, there's a fantastic, it's called like a bubble scatter map. A company called Resi Club put it out on insurance in every single city and state in the country. And when you look at it, Florida, for example, insurance rates went up 200 to 300% on average. In comparison to California, has had barely an increase in insurance rates. So I sold 14 homes within the first 2 weeks after the fires. People from the Palisades were buying in Santa Monica and Brentwood. This is right during when the fire had not been put out yet. We had no problem whatsoever getting insurance. I do not think insurance is going to be the problem that people think it is. Now, are people going to be underinsured? Yes. Are people going to have to go fair plan in some areas? Yes. So, but they will be able to get insurance. I think the increase will be 10, maybe 20%, maybe 25%. It's not going to be 100 or 200%. I just don't see that happening because.
But the reason, Anthony, the reason that they weren't able to to get such large increases is because the regulators did not allow them to do it. So if you were to take it the real market value of what insurance should have been, it should have been a lot higher.
I disagree for one reason, Ron. And sorry for disagreeing.
No, please.
In 2023,
yeah,
when State Farm and Farmers canceled thousands and thousands and thousands, I think it was 70,000 homeowners, most of them in the Palisades. Do you guys understand that was the most profitable year of the insurance industry? They made $88 million for property and casualty. $88 million in profit. They made 100% more profit than the previous year. And that was the year they said, oh, we're broke. We don't have any money. We have to cancel all these people. And then in the first quarter of 2024, they made $26 million in profit. They were on track.
Is that million with an M or is it billion with a B? Because I saw the latest number for surplus was like 145 billion.
Sorry, it's billion. It was 88 billion. Did I say million?
You said million, yeah.
It's 10 at night right now, you guys. So it was $88 billion. Thank you for correcting me. And it was 26, I believe it was 26 or 29, sorry. 29 billion in the first quarter of 2024. So they were on track to be doing $120 billion for 2024. So when the insurance companies are saying we have no money, we're broke, and they had the most profitable year in their entire history by 100%, I find that to be a problem. I just don't think it applies to California. I think, yes, they were very profitable because they didn't have a mass event like they did right now, which sinks their profits for years. But I think no. The LA fires, the cost of the LA fires is 1 year of profit for them. Mm-hmm. 1 year. Well, yes, they've been making this profit for the last 20 or 30 years.
You're right.
What I'm saying is they have the money to pay it out.
Oh, they definitely have the money to pay it out. The question is, if I look at it, I think that they should have been probably allowed to raise their rates at a more aggressive pace than they did before. Because if I'm just looking at it from a numbers perspective.
Ron, what are you saying? That's like going to the IRS.
I know. I'm just saying.
Oren, cut his
I actually agree. I agree with him too.
I agree. Listen, just do the math. Do the math here with me, okay? You have how let's say this is a once in a 50-year event that we just experienced, right? And you have one house that you're insuring, right? If the house was worth $3 million, right? How much should your insurance be? It should be $3 million divided by 50. Like we all agree, 1 in 50 is about the right amount of right risk. You'd find out. So I'll do the quick math with me.
Based on an actuary table, it's probably 1 in 100 year. But there's never been a fire like this in the Palisades. So.
Even 1 in 100 year, you'll find that the insurance rates to what they were charged was probably at a 50% or more discount. And that's what I'm saying. Like if you just do that rough math, 3 million even in 100 years, it's 30 grand a year. Okay?
Well,
People were not paying
AIG
30 grand a year.
You're not listening to this right now.
I have a different
They weren't allowed to
perspective on it.
raise their rates. They weren't allowed to raise their rates, and that's why they canceled insurance, and that's why they want to be out of California, and they will be out of California as if they get a chance to leave, because nobody will want to insure any of this unless we build very differently, unless we actually.
Ron, one of the things they were changing, I know the insurance commissioner, they used to base it on historical data. Their actuary tables looked at the insurance rates based on historical data in the past. And they said, guys, this isn't fair. These 7 of the 10 biggest fires in the state have been in the last several years. So now I think they just are allowing them to start looking forward and not just rely only on historical data.
So I actually looked at that a little bit when it happened. It was mid-December. So they finally came around to letting the companies charge based on future risk. But
Correct.
They also had these other funny rules that they had to sell 85% of their policies in fire zones. And so there were other rules that made it difficult. One of the reasons we have more insurance is because my wife is pretty brilliant and bought more insurance in the year before the fire. But one of the things that prompted her to do that was our State Farm agent was retiring. And she was retiring partly because it was becoming impossible to do business in the state. And I have to think that some of it isn't just about the company and how much surplus the company has, but your experience as an insurance agent. It might just make the business harder to run. And so you have agents who are leaving and they're passing their book of business on to other people who might say, look, I don't want this risk. I don't want all this stuff. So people are weeding out the policies they don't want to honor or don't want to continue. Our agent said, look, you guys need more fire coverage. Literally, she said that before she retired, which we're very grateful. I actually called her and thanked her. But, the experience of trying to get the payout is, as we mentioned, more challenging. Before we let you go.
Even if the insurance premiums are increased, Ron, by your amounts, I think people would be fine paying it. Like I said from the original, I don't think insurance will be an issue, whether they increase it or not, because it's not going to go up 200 or 300%. So if it goes up even 20, 30%, it's still in affordable budget range.
I think if the market was to decide what the insurance premium should be, they would go up 200 to 300%. I do think that these companies will leave because it's not worth for them to insure our properties at the current risk portfolio. And I think we need to come up with a very reimagined way of how we build things. Because if we do things the same way, these companies will end up leaving. We'll have insurance problems. That's my opinion. We can come back in a few years and discuss whether that's true or not. But I feel like the insurance companies like State Farm will not be here in a few years unless they're allowed to charge what the market is worth. And I'll leave with one small anecdote. I have a friend who's an insurance broker. I won't name the company, but one of his clients had a $10 million homes. They canceled their insurance, and the client said, "Okay, great. Show me what the options are." They said, "We'll go to there's a fair plan. Fair plan is a few $1,000s a year. You'll get covered for a couple $1 million, or maybe not even $1.5 million to $2 million." And they charged him X amount. He goes, "No, I want give me what you would charge me for that $10 million home. What's the rack rate that I need to pay your company for insurance for the $10 million?" And the rate was $80,000.
$10 million. Your land is probably half that. So
okay. I'm just talking. I'm just talking about the house contents. Like roughly, we're talking round numbers. We're not. Don't quote me on the exact number. But the policy quote came to $80 grand a year. And when I first heard that, I thought it was crazy. Then I did the actual calculation. I realized it's actually not that crazy. That's the market rate. And when you do that calculation, coupled with the fact that this is why a lot of people got canceled, because the insurance companies made those calculations and they said, "I don't want to be insuring this business anymore at a few grand a year. It doesn't make sense to me. I'm canceling and I'm going to get out of the state," which is what's happening and what's going to continue to happen, in my opinion.
There's another aspect to this also, which is one of the things I'm working on. We can talk about it another time, but creating institutions in the community that might also make insurance companies feel more comfortable about getting in. So I registered the Marquez Knolls Volunteer Fire Department as a nonprofit. And one of my neighbors was successful in getting us some pro bono legal help. And the lawyer talked to me and said, tell me about this organization. What's it going to do? And I said, look, we're not going to have a fire truck, but we want to be prepared. We want to have walkie-talkies. We want to know evacuation routes. We want to do some public education. And part of our hope is that insurance companies will see, okay, this neighborhood's prepared, that they're going to be ready. They may have some independent water sources. They're doing something to make the properties more insurable. And that's part of the goal, really, is to make it safer to move in and safer to invest in.
On that note, Joel, 74 streets in the Palisades are violation of the fire code because the fire truck can't get through because they're too narrow. They did a study 10 years ago, the local fire department, 20 to 25% of them are in the alphabet streets. So they're 26 foot wide or less. And in Santa Monica Canyon, like Mesa and some of the other streets, they're 19 feet wide. So if there's an emergency, not even a fire truck can't even get through there because they're too narrow.
Well, that's incredible. We need just some pickup trucks with water tanks on the back. That's literally what we need then. Yeah. I mean, it would help.
Or we just need to deploy this wonderful, wonderful firefighting technology that's come out in the last five years. And I think we really need to, this is one of those things. We need to think of new ideas. We need to use technology. We need to reimagine how we build. There's a lot of things that we can do. Right now, Joel, I don't see any of it on any level. Honestly, I don't. I see the only people that I see are activating any of this is the people of the Palisades who are saying, I want to build with something fire retardant. I want to do all this. I don't want to go through this again. At any other level, I don't see any of that.
Yeah, I definitely
honestly,
feel that.
If I'm the insurance company, I totally do what they did because they look at it. Nobody's clearing the brush. They probably have their own people that are going and investigating what will happen if there is a crazy fire. Does LA County or LA City have enough pressure to supply to shut down these fires? And they probably knew all these things that we're finding out. All this insurance company probably knew, and they said, "Hey, you know what? The risk is too high." All day long, that's what they do. They run the risk, right? They run the risk
analysis. Well, listen,
the risk analysis.
I did want to mention one thing before we close. So on April 19th, One Pally is helping to sponsor a community-wide event in Santa Monica at Clover Park. It's going to be from 10 to 3. Every single Palisadian is invited. An in-person event. All 83 community groups, schools, and religious organizations are all invited. It's going to be an in-person event. It's going to be amazing. We're going to send more information about it, but you're the first guys to know about it.
Wow. April 19th. All right. So if you can make it, Saturday. One Pally. And we really need to ask you more about One Pally, but we're short on time. We need to do another episode about that and all of the different great organizations that are springing up to pick up the slack and rebuild. Final thoughts, Anthony Margulies, on the optimism that you came in with, which I happen to share. Oren and Ron, I think are understandably.
We got to balance this out.
No, it's
Oren and Ron are like.
But that's
I'm very optimistic. I'm optimistic about the people of the Palisades, about the community of the Palisades. I'm not optimistic about anybody else helping us.
Right.
I don't see it.
It's a good refinement, but okay. The way I explain it to people is that long run it looks good. Day by day, it's a real grind. It's really hard. So, what's your prognosis, especially after hearing from the 3 homeless guys? How do you feel?
About the Palisades?
Yeah, still optimistic after an hour of this?
Yeah, it's the best place to live in the world. And we're way ahead of schedule, and we're going to start seeing construction on lots in the next 8 weeks. And people are coming together, and this is a great opportunity for people to help each other, which I love to see. I mean, on the WhatsApp groups and on the next door in the Palisades. I mean, I've never seen our community come together like they've come together. It's amazing to see. It really is.
I agree. I think the community will end up being way strong. The community was amazing in the Palisade, to start with. I think it would be
before we said we had a Palisades problem, and it was nothing, right? What was a Palisades problem? Someone's late to a nail appointment, okay? Now we have a legitimate Palisades problem.
Yeah. All right. Well, listen. Thank you so much, Anthony Margulies of Amalfi Estates, for being with us. This has been really fantastic. Great dialogue. Lots of incredible information. For more, you can follow us at 3homelessguys.com. If you have suggestions, ideas, questions, pod@3homelessguys.com. For Ron, Oren, and myself, Joel Pollack, thank you so much for joining us. And until then, Palisades, Stay strong.
Thanks, guys.
Thanks for listening to Three Homeless Guys. If this episode hit home, please subscribe to our channel. Check out 3homelessguys.com for RSS feeds to your favorite streaming service. Follow us on social and share this with a friend who needs to hear it. Drop us a review or shoot us a message at pod@3homelessguys.com. We'd love to hear from you. Stay strong, and we'll catch you next time.